morning, Victor. Thanks
James,
for being
how are you?
here. I always love a chance to talk to Victor. And just because Greg drew attention to Justin's tie, I'm going to start with a confession, which is that we colluded on our decision not to wear ties. There was collusion. But banking is changing. Banking is changing.
Well, every opportunity I get a chance to look a little younger without a tie, I take that opportunity.
Okay.
Right?
Well, that's great. So I'm really excited to have Victor here. Victor, I've covered banking for a little while now. One thing that's been very apparent is that Victor is a bank CEO who's very involved in matters like what we're talking about today. He's a very hands-on CEO when it comes to this sort of thing. And so I'm really glad we have a chance to talk to you about it. And I'm not going to waste too much time with preambles. I'm going to dive right in. Payments modernization, this is a major undertaking. It's got a lot of moving parts. Understandably, P2P payments and real-time rails and things like that get a lot of the attention, but there's also significant factors for how businesses are going to transact with each other, how businesses are going to transact with clients, and so far. So why is payments modernization important for your bank, for your clients, just off the top?
Well, I mean, clients are demanding it, first and foremost, right? As Jerry did say in his opening remarks, the world is changing, right? And the whole digitization of the economy has driven many more transactions through this. I sat in the retail executive team in the middle of the last decade, and I recall the meetings that we were having around how important would this be to start moving money around. And we made a significant investment at that time and continue to make that significant investment because our clients are demanding it. Whether they're consumer clients or business clients, people are looking for a frictionless movement of money. They're looking for it to be safe. They're looking for it to be relatively fast and relatively frictionless. Right now, 90% of our transactions occur either through this, which is the most important channel for transactions in the bank, or through the ATM or online banking, and we think that's going to go to 96% over the next 4 or 5 years, and we're gearing up for that. Now, increasingly, we're finding that our commercial clients, our business banking clients, are looking for all of those features as well.
Right. And so as that speed picks up and as people change channels, when some of the pieces of the puzzle in payments modernization, the real-time rail, for example, come online, what are you expecting to see in terms of changes in customer behavior? What's going to happen when that goes live for your customers?
Well, there's a couple of things. I mean, payments modernization is a large undertaking where the incumbent financial institutions are all investing a significant amount of money with Payments Canada to innovate for our country and to kind of keep us at the global forefront in terms of payment safety, payment security, and payment speed. There's parts to it. One is the large value transfer system, which is basically the movement of money, which right now moves in batches. So there is some risk, some risk at the very tail of money moving in batches. I mean, who's accountable for those funds between those two batches, the batch movement of money? That's a big part of the dollar movement, a small part of the transaction movement. So what we're trying to do is make it real time so there's no collateral risk in the movement of large batches of money. But the overwhelming amount of transactions are happening in the consumer space. Interac is the platform. Interac Instant, which will be rolled out later on this year, is the primary platform. The continued modernization of Interac and how RTR, real-time rails, flows into that will all be much more data-rich payments, because right now things are still relatively cumbersome. If you want to pay your telco bill, it's not that easy to kind of go from the e-bill that you get to the actual facilitation of the payment on online banking. It should be seamless. That data-rich exchange of information that will come with the new ISO standards, the 2022 standard that everyone is going to embrace. So we'll have a standard protocol for that exchange of information that'll make things richer, that'll allow more people to play in that ecosystem. So I think real-time rails is going to be good for Canadian banking, but it's also going to be good for the many players that want to contribute to the movement of money within Canada and probably create even more competition, which quite frankly I like.
That's great. So data-rich payments are important, and let's dive a little bit deeper into that if we can. Just help me understand from your standpoint what we're missing out on right now without that rich data, and give us another example or two of how you can imagine that driving something new for the bank or new for your clients. What's data-rich payment? Because data seems to be the new oil, gold, pick your commodity of value for a lot of institutions, including banks now. So what do you plan to do with that data when it starts flowing?
Well, I mean, you're going to ask me the question, are we going to use it to our advantage? No, we're going to use it to, it's an obligation for us to make sure it's well protected.
Yep.
I think the first and foremost use of that data will be to allow our clients to facilitate transactions more frictionlessly in the ecosystem. Right now, if you go to our commercial clients, well, we put a lot of tools on their desktops in terms of the movement of money and treasury management. When they actually move money from one company across a border or to one of their suppliers, the data that's involved in what they send and what's captured at the other end doesn't follow a common format. So lots of times people are searching for a missing payment, or when will the payment arrive, or how can I track it real time? All of those factors that people value. People value today knowledge, and they want to have the information up front, up there, right away in a common format. And I think that's what we're really working toward, is that common format for the movement of money.
Okay. And you mentioned, obviously, off the top, job number one is privacy. With more data, with more speed, potentially, you could introduce more risk. How do you think about, A, privacy, and B, security, since we're talking about payments and we're talking about the flow of money? I mentioned to you as we were sitting here this morning, we saw news today about a security flaw in WhatsApp that was a major flaw. And this is not a mom and pop app.
Right. You use it, I use it, we all use it. Right?
There you go.
Mm-hmm.
So how does a bank like yours think about getting to a point where you can maintain that level of trust you've spent a century plus building up with your clients when it comes to both how their information is going to be used and how safe their money is going to be when it starts moving this way?
Look, there's a tendency when it comes to innovation to work ourselves into a frenzy of the art of the possible. How fast, how quick, how much. And I think in running a Canadian bank that's been around for 152 years, one thing hasn't changed, and that's security. I was reading a book about one of our CEOs from 100 years ago. He was the CEO of the Bank of Commerce, actually one of the founders of the ROM. And he said there are 3 priorities for banks. But the first priority is to protect deposits. Nobody ever talks about that. It's always assumed. The second priority is to help businesses grow. And at the time, he said the third priority is to help families prosper, individuals, families. That first priority today has been expanded to not only protect deposits, but to protect the data. Because as we heard earlier, getting to that data could help you get to those deposits. And therefore, we spend a lot of time on defense. Whether it's defense in terms of protecting bad money from coming into the bank with anti-money laundering, activity that's not insignificant, to good money leaving the bank, which is really all about fraud and cybercrime and malware, undetected malware being downloaded on your desktop, and unbeknownst to you, somebody's basically been able to replicate the keystrokes and create a password for you and then take over your account and start moving money. There's a lot more of that happening, and we spend as much time and maybe more time on defense as we do on offense. And I say to everybody, banking's a team sport. We got to have a good offensive line, we got to have a good defensive line, because that's the way to win in the end.
And one of the things that always strikes me is you can have your cyber teams internally. You can spend as much money as you want, and some banks spend a very great deal of money in the billions on technology and security. You can drill your employees in this, but you've got tens of thousands of customers, and every one of them is potentially a vulnerability as well. Yeah. So how much, as we go down this road, is the way we authenticate users going to matter? There are conversations about digital ID and where that's going to go. How much time do you spend about thinking about how you can know, that it is your customer making a legitimate request to make that payment?
Well, we spend a lot more time on that. We just signed up with several of the other FIs to Verified Me, which is offered by SecureKey, and I don't plan on advertising any particular vendor or provider. I think there are a lot of good ideas probably out in this audience that I'm not even familiar with to this day. But that is an example of someone being able to share their identity with another institution in a sort of an authentic and anonymous way, a proven way. So another institution can rely on that data and allow the client to log in. This is, some of the key tenets of open banking that we're going to have to get to as clients, as Canadians want more power in their hands. And I think that's the real power of technology, is technology has really changed the playing field. It's leveled the playing field in many ways. It's made everything much more transparent. Consumers are smarter, businesses are smarter. We've had to become smarter as a result of that. But I think the security aspect of things probably is the most important thing out there today. I know there's a lot of emphasis on speed, but I always tell my team, security trumps speed all the time, but speed is important. So I don't want to hide behind the veil of security. I know that moving money around quickly in a data-rich format is the way the world is going to, but we need to kind of focus on security, and it always has to be at the forefront. Consumers need to start thinking about more complex passwords. Consumers need to start thinking about refreshing passwords. One needs to think about both physical and cybersecurity. A lot of the nefarious activity that we see involves very little technology, but sometimes they're inside crimes. Sometimes people figure out how the system works. Somebody can imitate the bank on the other side, and innocent person believes you on the inside, and a company's starting to move money around to a place that they never intended to move it to. Yeah. This is way beyond the emails that you get where say, please move money. It's somebody impersonating the bank. And that is something that we need to continue to defend against, continue to educate our clients on, creating the right, some of it's the old controls, you know, how segregated are the duties? How much dual authorization do you have in your company and moving money around? All of those factors are really, really important.
That's really interesting when you say security trumps speed. Speed's important, but security trumps speed. With customers demanding speed and with the ability coming to do payments in real time, is there any way to slow things down when you think there may be a security risk or a privacy risk? Are there ways to build speed bumps into this new world?
You could just unplug everything for a while and try and get it going up and going.
Sure, that would go well.
Hey, listen, you know, the Petya virus, the reason that Maersk was able to get up and going was because they had one server that was down at the time. It was unplugged, and they were able to replicate their entire company again by bringing it back up to speed again. So some of the old ways of doing things are not necessarily things that I'd cast aside.
Yeah.
Right? I think today the speed aspect troubles me most in large value transfers, like in transferring large sums of money, because today, when we use SWIFT, which is, you know, what all banks use today, and there are lots of other ways of moving money abroad. We've tried Ripple, we've seen some of the benefits of some of the newer technologies that are out there, but the delay that's involved in moving money, if it is a fraudulent transaction, especially if it's a large amount of money, you can actually recover it. Yeah. If it moves real time, it's really, really hard to recover. Yeah. And that's what we need to make sure it gets really, really buttoned down.
Okay. A lot of these same questions and issues arise when we talk about open banking. And right. I think we're at a point now where there's general agreement that open banking is coming to Canada. I think exactly how, the details are a lot more scarce. But I saw, you know, there was an interesting survey that Accenture did recently, which showed that roughly 3/4 of people they surveyed said they were not interested in open banking, and upwards of 90% of them had security concerns, which I think is more of an education problem probably than anything else. But also a strong majority of them said, you know, that it was their bank that they trusted most to deal with their financial data. So when you think about this, how are you preparing for open banking, and what role do you see, you know, the major banks like yours playing in that ecosystem?
Look, we've embraced, you know, this is the funny thing, a 152-year-old institution has embraced technological change throughout its history. If I kind of look back at our history, we launched ATMs first in Canada in the late 60s. You actually had to take a key, turn the key, and you get a packet of $30. Now that evolved from there. We're the first to launch telephone banking, online banking, the second to launch mobile banking, and today we're a leader in mobile banking, and we know that open banking is coming. We advocate for it where we can. The standards that need to be agreed to are important. That's the biggest benefit of open banking today. The old way of allowing another provider to scrape your information so that you can aggregate it somewhere in a non-standardized, not necessarily secure format that's agreed to by all institutions, I think it is an issue. And I think open banking is a way to, again, put more power into the hands of consumers, to give them the choice as to how they want to bank, to recognize that we need to keep a competitive financial system. But agreeing to those protocols is step number one. Every company then will choose how to compete on that open banking platform. And every consumer will choose how to basically share their information as they wish. The test case right now is the UK. So they've kind of embraced open banking. It's quite an interesting challenger bank environment, neobank environment. Some are proving the model really, really well, others are not. I believe that their report on open banking in terms of the first year or so is coming out shortly. That'll be quite instructive on what they have learned. I do believe it is coming to Canada. I do believe that we'll agree to standardized format on how to exchange information, put more hands into the power of the consumer, and then it'll be up to us as to how open that banking platform is that we offer to consumers. We already have a direct bank. We're a leading digital bank. For us to say this isn't going to happen is for us to basically lose another element of competitive edge, and we don't want to be doing that.
And so how do we set those standards? How do we get to the standards and the protocols? Because you mentioned the UK example where I think government has been fairly prescriptive about things, but there have been other jurisdictions elsewhere in the world where it's been, I think, a little bit more organic from the industry side of things. Do you have a perspective on how involved or prescriptive government needs to be as we set that base level of standards and protocols so that everybody's working from a common playbook?
Well, I think there's a couple of things in terms of how we do it in Canada, which I think is world leading in many ways. You know, the Canadian banks and the Canadian financial system has never had a systemic banking crisis, and I don't say that lightly, but I think a lot of it has to do with how we've moved forward, how regulation has moved forward, how we've always been focused on safety, security, and good prudential regulation. So what's happening today is we're waiting for the expert report. The government has assigned some experts from varying parts of the financial spectrum to say, how should Canada do open banking?
Right.
And then we're going to have to change the Bank Act. The Bank Act governs financial services. Those who are not banks today will want to be as close to the banking system without being a bank. I mean, that's what Amazon's trying to do. That's what everybody's trying to do. How closely can I get without being regulated? Because once you come into the banking sphere, and I would argue that some of the near banks that take deposits and hold prepaid cards should be banks. They should be regulated like banks, so we have a safe and secure system in place. And I think that's the process that we'll go through. We will have a report from the experts, we'll have a consultation period, and then the Bank Act will be revised and modernized, for the next decades ahead. But what has to be imperative, and I know sometimes I might sound like a broken record, but how do you keep safety and security and stability in the financial system at all times for all new players that enter? Because I welcome them. I think we need more and more of that level playing field, but just let's all play by the same rules in terms of the regulations that are at hand.
And just quickly, are there any lessons you've taken from the UK case study so far that you would say, are worth thinking about or applying in Canada?
I'd only be hypothesizing about what the results of the first report will be, but I suspect it'll look like some of the surveys that you alluded to earlier from Accenture. Not because I don't believe that people won't embrace open banking, I just don't know if they know what it is in its fullest sense. The psychology of money is a very, very weird thing. It's one thing to transact and buy goods or widgets or whatever you might call that. It's another thing to store your money, store your wealth, store all your data that relates to your financial well-being. And people think about things differently in that regard. What I've heard early on is that consumers haven't been adopting it just at a brisk pace in the UK. But I think that'll change over time as well. Things have a tendency to ramp up at times with certain innovations that get introduced into that ecosystem.
Gotcha. So we tend to talk with good reason about some of these things in jurisdictional terms. We talk about the UK example and then what Canada's going to do. But your bank, very much more so even than it was a couple of years ago, is a cross-border bank, right? You've got major U.S. presence through CIBC Bank USA. You've got operations around the world, and customers increasingly, if I'm not mistaken, don't recognize borders in the same way they used to when they want to transact and do their banking. So where are we in terms of sort of interoperability, I guess, between jurisdictions like Canada, the U.S., and Canada and other markets, and how much work is there still to be done to make that as frictionless as possible?
Look, it's interesting how the world is going to evolve because you started off talking about WhatsApp. WhatsApp is sort of adopted in some regions of the world more than others. You have entrenched players. You have WeChat in Asia. You have WhatsApp in Europe and North America. and a mix in Latin America, and then other newer players will emerge. I don't think it's going to be a duopoly in terms of how chat works with some of these technologies. I think the same thing now is useful to think about in terms of payments. So I think in terms of consumer payments, smaller payments that make up the bulk of payments out there, I think you go to more of a regional approach. I think, Tencent has done an amazing job in China. I mean, they've leaped ahead. They've driven incredible innovation. But are they going to be coming here soon? Is Alipay going to be coming here soon? I think there'll be a number of reasons, both political and otherwise, why, well, sometimes you can slow that process down. I think the other reasons are due to what the incumbent players are doing. So we have, I think a made in Canada system that I think will be quite resilient for quite some time, given the agenda that Payments Canada has in place and the financial institutions and non-bank players that want to play in it. But what we've come to recognize is that most of the payments that flow in Canada are between Canada and the United States. There's, 75% of our exports go there. It's just a natural flow. Canadians go to school there, they work there, they travel there. And with our US bank, we've developed a cross-border payment so people can our clients can move money back and forth on the convenience of their phone from the US dollar bank account in Canada, which doesn't allow you to write a US dollar check, to their US dollar account in the United States, which allows you full bill payment privileges and checking account privileges with a separate debit card for the US system. But it's as integrated as we can possibly make it for their experience. So that is, I think, going to be something that we continue to work on as we've gotten access to the US payment system. We've also tried to put more power in the hands of our clients when they move money abroad. And again, here we worked with fintechs, because one of the things that I pride ourselves on is our team. We've got a brilliant team at CIBC. We've always focused on getting the best and brightest in terms of technology, and we've really embraced the fintechs that want to help us change. And one wanted to help us change, helped us move money around the world. So we were the first to implement this on our mobile banking platform, and still are the only larger bank that allows clients to do this. 2 years ago, you used to have to line up in a branch to send money to the Philippines or India, and we'd charge you $35 or $50, depending on the wire transfer. So out of a $100 transfer, it could be half of it goes to fees. And there was no great client relationship that got built out of that. We introduced a technology that allows our clients, from the convenience of their phone, to send money to 50 countries around the world. There is no transfer fee, and you get presented the FX rate. And the money arrives within 1 to 3 business days. Now, I know there are other providers out there that claim to do it better and their FX is better. We move it quickly at a very competitive FX rate without actually having to make you wait anywhere, and actually can do it to 50 different countries from the convenience of your CIBC bank account. That is an innovation that continues to be a leading innovation in our Canadian ecosystem.
Yeah, and we're seeing more partnerships between major financial institutions and fintechs, or paytechs as a subset of that.
Yeah.
There's also always going to be lots of talk. You mentioned companies like Alibaba and Tencent, and obviously there'd be the North American players like your Googles and your Facebooks and your Apples, which is now doing credit cards and mobile wallets,
right,
and so on and so forth. When you look at that landscape, are there opportunities that are really interesting to you? Are there things that scare you in terms of platform players moving into payments and financial services? Look,
nothing scares me. It makes it more interesting when there is very good competition and when there's very good disruptors in the financial services system. I really believe that we become a healthier economy when we have that, either in banking or in capital markets. The most important thing is that those who play in the deposit-taking part of things are sufficiently enough capitalized to deal with the operational losses that come with fraud and all those things that are out there. But when it comes to innovation, I think it's about how do you stitch together the entire ecosystem. So if, small business still accounts for a big part of the Canadian economy. And I'm hoping, and for our country to be healthy, I'm hoping that we see more and small and medium-sized businesses emerge that scale up in our country and take us into the future, because it's going to be really, really difficult to create the 40,000, 50,000 person company in Canada. Not because I don't think we may have those, but I think naturally the world will go to smaller and medium-sized business. How do those smaller and medium-sized businesses frictionlessly enter into the ecosystem so the movement of their money is smooth amongst their consumers, amongst other businesses that kind of compete with one another. How do we make sure that their accounting software that they're using, where they don't want to be burdened with a large overhead, is integrated with their banking platform? We just announced yesterday, our smart banking for business platform, which I think is just the beginning of allowing Intuit and allowing Xero and allowing other players into the ecosystem of banking, so a small business person doesn't have to worry about the movement of their money and the accounting of their money. I think there's a long, long runway still, and a lot of you probably in the audience are thinking through how you can make life easier for them. I think that's a big innovation that's yet to see its fullest, finest form.
And that's interesting as well, because that's that seems like a potential area of opportunity. But one thing I am curious about as well is payments as a contributor to the bottom line of a financial institution, right? Historically, there were fees attached to a lot of payments. Those are coming down. I had a consultant who does payments work with a bank once say to me that he believed the price of payments was going to zero. It's a provocative thing. I can't say whether he's right or wrong. But I am wondering, as you go through this modernization, as you invest in new systems, new ways to pay in the Payments Canada modernization and so on, while there's pressure on the fees and the pricing that comes with payments, how do you make this work and work for the bank's bottom line at the same time?
Right, that's a good question. I mean, look, things are changing out there. 3 years ago, the banks all charged $1.50 for Interac e-transfer. And I said, this is stupid. Like, we're just encouraging people to write checks. So we were the first to drop it to zero. Now, there's a fee associated with that we pay to Interac, but that's okay, because we're trying to incent consumers to do the right thing and to make it much more convenient for them. So our fee is going to be going to zero. You know what? Once you go to zero, who's going to pay for the innovation? It may be paid for another bucket from another bucket. It may be paid from net interest margin, but I suspect it won't go completely to zero. Things are much more transparent today, and I'm the first one to tell you, you could read all of the bank's financial reports, our own, and as well as everybody else in the ecosystem, and add up all the fees. You say, wow, there's a lot of fees in there. That is something that we need to get rid of, the irritating fees for clients. We need to make sure we have a good value proposition for the money that they do pay. And you need to have a sufficient amount of margin in there to be able to continue to invest in your business. It's really, really hard to invest in a business that has zero fees. Somewhere, somehow, in the value chain, you need to be creating some sort of value for your investors or for your shareholders, or you're going to collapse in on yourself. But I think the irritating fees, things that, technology can be introduced where a client doesn't have to incur the fee, that's where we're going. So we're making it a better experience for our clients, and they feel like their bank has their back, right? That's what we really are moving toward at CIBC.
And is the fee pressure going to be same in the small business space, in the large business space, as it is in the consumer space, do you think? Or is it going to be a different model?
I think the more things are standardized, the more likely that you have lower fees. The more things that are customized, as in small business and in commercial banking, where everybody wants a little uniqueness to the way they do business. There's a large swath of it that can be standardized, where the fees get compressed. But once they get customized, it involves people, it involves some special process, it involves some cost. And look, we're working for our shareholders too, so we need to make sure that we're doing the right thing for them and for our clients. So I think you'll see the fee compression happen there too.
And just quickly, when it comes to the payment space, what would you consider the biggest challenge in front of you and in front of CIBC right now?
Well, look, there's so many good ideas today. There's so many good ideas. And I always say to the team, which ones do our clients value the most? And that is the most important thing to understand. And you can only understand that not only through technology and what clients are doing, but the human interactions that we get each and every day. So we have the benefit, and this is where, a bank does a lot of the stuff that people don't think about. We take over 100 million calls a year. We take over 25 million live calls a year. I visited our contact centers 2 weeks ago because I try and see them every year, and I try and meet them in large groups to get their ideas. And their ideas, those folks of ours that are in the very front lines dealing with our clients on a 5-minute call or a 6-minute call each and every day, are the ones that have the best ideas that are conveyed from our clients. Taking their feedback and then saying, all right, of all of these ideas out there, because as fees get compressed and there's more ideas out there, we have to be selective in terms of deciding what can we implement that our clients value most. That's the thing that's probably the biggest challenge right now.
So the shot clock is winding down, and I'm going to give you a chance to, I'm going to clear the floor and give you a chance to do your Kawhi Leonard buzzer beater here.
That was amazing.
That was amazing.
That was, you know, I watched the game. I was at that game, and the first thing that came out of almost everybody's mouth independently is that was our Joe Carter moment in basketball. Yeah. You know what? He's amazing.
It's the new bat flip.
I want to be Kawhi Leonard when I come back.
All right, so lob up your Kawhi Leonard shot as a parting shot here.
Well, I have no parting shots other than to convey to you that our bank is an open bank. We think about technology. We like good talent. We like good ideas. And I admire all of you who are in this audience who are either thinking about it on behalf of your own financial institutions, because I like good competition, but those of you who are not part of that incumbent group who are trying to disrupt, what I would encourage you to do, because I've found that one thing that people don't realize is acquiring clients is a very costly endeavor, and many of you have technologies and ideas that can make the current ecosystem better, or we can share the economics of savings and better client experience, and many of you have those ideas, and I applaud you for it. We're not going to make Canada, what Jerry said at the beginning, the most innovative payments ecosystem with incumbent banks alone. We need to work with all of you to make it better, and I applaud you for that. I applaud you for your entrepreneurialism, and it's one of the reasons we've launched an innovation banking unit that banks technology companies, because that is our future. Can't forget our past, but we need to think about our future, and you're part of it. I can't see you all because it's so bright up here, but I applaud you for being here, and I thank you for listening to me and to James.
Well, thank you so much.